That's your Taylor ProPath Financial. We're going to talk about how to do rollovers from the after-tax bucket in your 401k. Not the pre-tax bucket, not the Roth bucket, but the third bucket, if your company has it, called an after-tax bucket. So let's just reiterate really quickly. The most a person can put in right now is $61,000 into their 401k. That's a combination of your elected deferrals, the money that you choose to put in there, any matches or profit sharing plans that your company puts in, and then any additional money that you put in if you're allowed to with an after-tax bucket. So you leave your job and you got money in the after-tax bucket, the third bucket, the bucket that's usually unheard of. What do you do with it? Well, I'm going to give you a couple examples of what you can do with it right now. So you have the ability to roll that money out, but there are very specific rules associated with it. So let's dig into it. So again, just to reiterate, 401k has a pre-tax bucket, a Roth bucket, and potentially an after-tax bucket. So confirm with your plan to see if that exists. So let's say you do have the after-tax bucket. In example one, let's say you have $100,000 in your 401k and $80,000 of it is pre-tax, just so that matches up. $100,000, 80 of it is pre-tax, and 20,000 of it is after tax. And let's say for some reason you only want to roll out 50,000 bucks, so half it. You're just going to take half out of your 401k. There's basically a pro rata rule that's going to pull some of this and some of this. So they use a calculation that shows that you can see of the 80% of it is pre-tax and 20% of it is after tax. So when you pull $50,000 out, 80 is going to go to an IRA and 20 is going to go to a Roth or taxable account. So it's going to be a pro rata portion if you're only going to pull out a partial amount. But let's say you want to pull it all out. So in example two, you have 100,000 bucks. You request $100,000, so like a full rollover out of your 401k. 80,000 of it is pre-tax, 20,000 of it is after tax. $80,000 can be rolled over to an IRA, not incurring any taxable event, which is what you want to do. And then $20,000 is after tax. That could be split up between a Roth and a taxable. But why Roth and taxable? Because maybe there's some earnings in there. So the basis, the money that you contributed to the after tax account has already been taxed. So you don't get any sort of upfront tax deduction. So the money's already taxed when it goes into your after tax bucket in the 401k. Then there may be earnings in there that are tax deferred. So you can defer some of this, pull it out, put in a Roth, or all of it, or put some of it in the taxables too. So you can break it up into portions if you want to. That might be some more complex planning where you need a financial planner, or financial advisor, or a CPA to help out with that. But this is how you can work with an after-tax bucket if you leave your job. Now, here's a big question. Why? Why would you have an after-tax bucket? Let's say you're a high-income earner and you max out your contribution to your pre-tax or your Roth, the $20,500, or the additional money will be $22,500 in the year 2023. So let's say you just max that out. And let's say you want to put money into an investment account, but you don't want it to be taxed in this current year because any additional money you would go into a regular brokerage account that may have dividends, interest, capital gains, long-term capital gains, those types of things. In an after-tax bucket, all those trades, investments, dividends, capital gains, and long-term capital gains, if you create them, or short-term capital gains for any trades, it's all tucked in the after-tax bucket, so there's some tax deferral. But now you've left your company and you don't really want that money there. You need it outside to help with your financial planning or the situation you're in. Now you want to roll it out. This is something to be aware of. I'm going to hit a link below, this little article that I found on the IRS, so you can review it yourself, the rules, if you want to dig into this. But this is how you utilize an after-tax bucket. If you need help, go ahead, click the link below. It goes directly to my calendar. You can set an appointment so we can go through this together if you need ongoing financial planning. Thanks for watching.